So as we're all sitting comfortably, we'll begin. Welcome everybody to the ISCF Commercialising Quantum Technologies Investment Accelerator. We're a small and select group today, basically because finding a date when all four of us aren't on holiday and are available is quite difficult. So we're recording and live streaming today's event. So you can, if you've enjoyed it so much, you can enjoy it again. I'd also say that this is a bit different from some of the other competitions. If you're used to Innovate UK briefings, we do a lot of our other competitions such as CR&D. We run them kind of, if not every day, then certainly every week. Investment Accelerator is more of a bespoke competition. So if it looks like we're having more conversations than is usual, that's because it's very much tailored towards the particular needs of quantum. So as we're such a small group, I would say if you've got questions on content and clarity, then raise them as we go along. At the end, we'll collect any other questions, particularly any online questions, and we'll have a bit of a panel. I'd also stress, I understand this is a slightly different competition to many of us. We are all available to both give more individual information or meet with your investment committees, for example, and we're available to give you more information than we would perhaps normally do on a normal competition. Okay, so just to introduce us, first of all, Roger McKinley, who's the director of the ISCF Quantum Challenge. I'm Chris Jones. I'm deputy director for the ISCF Quantum Challenge. Bruce is a program lead for investor partnerships, and he's our investor partnership lead for this particular competition. And Melissa, who's our portfolio manager for competition schemes, shortly to be replaced by Lydia. Okay, so we're the four people who are going to do the combination of presentations today. So we're going to start off by talking quantum background. By the way, we're not going to tell you what quantum is. We could do that, and if need to, we will do that. But at the moment, we're going to kind of assume that you've certainly heard of quantum, but we're not going to go through the fundamentals of what quantum is and also what it can do. We're going to talk about what it means to us. We're going to talk about the scope of the competition, the eligibility in terms of investors, the application process, how you can apply, and also the question and answers towards at the end. If that's clear, we'll start with Roger.
Thanks very much, Chris. And yes, we won't explain what quantum is. There's a famous interview of the American singer-songwriter Don McLean when the interviewer said, what does American Pie really mean as a song? And there's a long pause, and he says, it means I don't have to work another goddamn day in my whole life. So to some extent, what quantum means here, new technology and some real opportunities, but we're not going to go into what electrons are or are not up to. Chris, you better shout if I think, am I handing on to Bruce at the end of this, or to you?
Yes, I think it's Bruce.
Okay, shout if I overshoot. We're not starting from scratch. This is something really important. But the National Programme on Quantum Technologies goes back much further than the industrial strategy. So 5 or 6 years ago now, a plan was hatched to start coordinating what would have been disparate science investments, research investments in the physics behind quantum technologies. And the first move of that, and this is very much EPSRC led, was to actually create through competition 4 quantum hubs, an imaging one in Glasgow, a sensing one in Birmingham, comms in New York, and computing in Oxford. And this is the first giveaway. This is a quantum science program. It's not a quantum information science program or a quantum computing program. It's much, much broader than that, because these applications are all to some extent mutually supportive of the development of the technology. And so, having run the competition and achieving those 4 hubs, they did go on to behave like hubs. So in fact, I think there were something like 26 to 30 universities involved in those hub activities, plus a lot of interaction with industry, working with about 100 companies. So we're veterans of almost 5 years of this, and that program is about to be refreshed. It comes to an end at the end of November, and in the beginning of December bursts into life as the Hub Phase 2 program. not just about technology, also training and skills. So a great slice of that pie was also on centres for doctoral training and studentships. There was a little bit of investment in facilities, the NPL, Quantum Metrology Institute. There was significant support from DSTL. This is a technology with sovereign implications, and DSTL were not only investing in quantum sensing with applications such as navigation in mind, but also in studentships. And then we in Innovate UK ran a couple of quantum programs which ended up in a large number of small projects exploring the feasibility and early development of a program. Plus, and the most important thing is, this isn't a single technology which is gradually creeping to maturity. It's a very complex ecosystem, and we kept involved EPSRC investment in the science, and that's going to continue for several decades still. There is still the need for fundamental research. So that totaled about £400 million of investment, and I should mention that the Innovate UK investment, of course, included or attracted private investment because of our rules of funding. We ran a pioneer program. It's a bit misnamed now, to be honest, because it felt like we needed pioneering, but within literally weeks of launching these pioneer programs, we were already looking at the next wave. But these programs have been running for almost a year. They started in November, 4 projects. But we wanted to leave computing out of it, and many of you will know computing is a difficult area. We wanted to focus on the sensing and the comms and the imaging. We were oversubscribed. We had a lot of interest. It gave us confidence that industry was interested, and we ended up running 4 programs, and they're in flight at the moment. They're all industry-led. They're complex consortia. One of those programs has 16 different members in it. And we almost say that the public purse pays for the collaboration and the private purse pays for the work, because collaboration is expensive, and it's not the most efficient way of doing things, but it is actually what we want to fund, because we want communities to develop, and if you like, little bits of supply chain to begin to develop. So there's an atomic clock program, there's a gravity sensing program led by an environmental survey company. There's a quantum key distribution by satellite program led by a startup, Arkit, and there's a quantum over fiber program led by Toshiba Research. So all industry-led consortia looking at some very, very practical applications, but not computing. So we have a plan for going forward, and this amounts to, you could say, about 600 million, which is why we had a ministerial announcement that we could see our way to a 1 billion program on quantum, which is quite impressive. It's difficult normally to get a strategy unfolding like that. It looks as if we've cut down on the hub expenditure. We haven't, but the pie's grown bigger, so we're continuing to fund those 4 hubs. They have changed shape slightly. There's a new scope of work, and most importantly, I think, on the computing side, what had been not quite a single technology, but a strong emphasis on ion trap technologies for computing is now being augmented by some very serious expertise on quantum semiconductor qubits and also superconducting qubits. So that's recognition, but in fact, in the world of computing, I think the idea that this is a one-winner race has begun to be overtaken by the idea that in fact there are several opportunities for different types of technology. So the hubs keep going. We have an investment in a National Quantum Computing Centre, and that is really looking ahead to the fact that this is a sovereign technology and there will be export controls and indeed controls on who can own quantum companies. It's a relatively modest investment in the world of quantum computing. It's about 95 million. It's our only real facility investment in the program, and it's really in recognition that I think in about 5 years' time we will see a lot of quantum computing activity, and some of it will want in a controlled environment of a government lab in terms of who has access to the IP. That's not to say it's going to be a closed-door institute. It will also be facilities for those startups who are finding difficulty in getting access to capital, and this will come out, I think, during the morning. That quantum computing not only needs the funding of bright people, but 2 million's worth of bright people tends to need 2 million's worth of investment. And I was with the Royal Holloway team a week ago, and it was impossible to take a photograph in their clean room without something lurking in the background, which was between £1 and £2 million worth of kit. It's a very capital intensive business. The Industrial Strategy Challenge Fund is a significant portion of this, so this is more of what we were doing on the Pioneer, but significantly larger, 150 million rather than 20, and that is going to be matched by significant industry contributions. Really at this stage we couldn't justify continuing public investment without what had been interest from industry in the last phase manifesting itself as more of an interest, but investment in this next phase. So the industrial strategy, let's assume we will continue to have one. The big premise behind this is turn our economy into the sort of economy we want, where we can make use of the smart people and the smart institutions we've got. The metric which gives us an idea of the shape of the economy is 2.4% of our GDP being spent on R&D. And so the Industrial Strategy Challenge Fund enables us to make, with the public purse, strategic investments to help companies bring that about. So our objectives for ISCF, and there are very similar objectives for Quantum Bit, is increasing business investment in R&D, increasing the multi and interdisciplinary research relevant to that, business and academic engagement, collaboration between across the spectrum of companies, between the smaller companies and the larger, more established ones, and increased overseas investment in the UK. Now, it's probably worth pointing out we see there it being two sorts of company out there, and we're interested in both. There are quantum technology companies, many pre-revenue, and there are also large companies, you might call them integrators or service providers like British Telecom and BP, whose businesses can be transformed by the use of quantum technologies, and we're interested in both. So this is a commercialization program. It was possibly the last significant announcement Theresa made before the Great Reshuffle, and that was on the 10th of June. 150 million of public money, and that's the vision which goes with it, growing our leadership in quantum technologies, delivering these transformational products which have a significant impact on our economy and our society, particularly because, be they computing or sensing, we see them having a very strong impact on productivity and competitiveness. So a good example of a non-computing one would be, for example, medical imaging. And if we can get the quality of our imaging such that the false positives from certain medical investigations are very, very low, then of course the efficiency of being able to address certain rare but costly to address conditions is transformed. So to some extent, there's an interesting side of quantum. It's both about the computing power to be able to mine big data and play with big data sets. It's also about helping us to collect real data and not noise. And high quality sensing is an essential part of that. So both boosting productivity and competitiveness. We feel this is a technology which large companies serving large global markets, and we know this from the interest we're getting, will want to embrace. And of course, depending on those companies, vary the companies looking at their own research, or their companies looking at who they might acquire one day in order to serve certain markets. So we're at the industrialization stage, the industrialization side of commercialization, and as Innovate UK, to some extent, when people say, well, how do you actually know you're not being guilty of pushing the technology? We say, well, we may be guilty of pushing the technology, but we're going to do it with a co-conspirator called industry. Industry sometimes pushes technology as well. So we will be awarding money primarily to industry-led activities. Now, here's where we part company from, and we'll be very honest here, from what we've tried and tested and we're very good at, to stuff which is tried and tested, but maybe not to the same extent. So we really know what we're doing with CR&D. It is a brilliant tool. We know the rules, we know the state aid rules, we know how to run competitions. I'd say it is where Innovate UK, as part of UKRI, shows tremendous professional excellence and experience. And a lot of what we'll be doing will be CR&D again, and we've already launched that competition. So it will be industrial-led projects. We're looking for industrial-led proposals. We're not looking necessarily for an end user, but we're looking for a market. So this is in recognition that, in fact, the market may not be with the user. It may be with an integrator or the next step in the supply chain. We joke that every technology which is seriously used comes from someone who's on an approved suppliers list. That's the way the life works. So between the startups of today becoming approved will be quite a lot of growth and in some cases acquisition. We're still continuing with feasibility studies. We're very keen to join in big industrial investments, and that's what these technology projects are about. It's slightly different from CR&D, and we're generally expecting there to be more of an industrial investment or investment from specific companies than you'd expect in a normal CR&D project. It might be in facilities, or it might be in a specific technology, and we've yet to launch for competition on that area. And then what today is about is the investment accelerator, and Bruce, it's true, it's not totally new, it is proven, but it is an area where we're still being very flexible and very keen to engage with you and your ideas and questions, because this really is aimed at bringing significant investment into what I've already said is a complex business, and also one which is capital intensive. And we're very much looking at the benefits we can derive from public money and using public money to encourage VC investment, particularly in these early stage, pre-revenue stage companies at seed round, is something we're very, very keen to do. And really it ticks all the boxes if it's if within sight is the increased sales of these QT products, an increased investment in R&D, and pulling on this ecosystem of research when businesses and academics. And I've got to say, the idea that for some reason the UK can't get good ideas out of universities into businesses is something we don't subscribe to. It's trite, oversimplistic, and it's not the evidence we've seen over the past 5 years of our national quantum program. So, and that will be met by the 4 delivery strands I've already talked about. So let's talk about them in a bit of detail. 83 million, more than half on CR&D, aimed at new products and services. Very, very similar, more again as we did on our Pioneer, but now we're computing in scope. And the other thing which is really important to point out is we fund strategic projects. So we get a lot of people applying for funding saying, I've got a brilliant business, just give me more money. And we say, well, that's very difficult. What you can tell us is you've got a brilliant business, and there is one project which, if you could afford to run or you could de-risk, would transform your business. Tell us about that project and tell us about how it's stitched into your business. And that's very much this strategic project orientation, or in the case of IA, strategic projects stroke strategic companies, is very much what the story we're looking for. So we could be funding about 15 projects along this route. First tranche is already launched as a competition. We'll have another 2 phases of that. Feasibility studies, a couple of rounds planned for this. Projects of up to 500k, so these are smaller than the CR&D, and very much letting, as long as there's an SME lead. I mean, it's not lazy, it's just an incredibly useful filter. There's a huge difference between a company, a university who tells us, I'm sure industry's almost interested in this, and an SME who says, I'm going to lead this. That's a huge transition. So we've still got a lot of universities saying, how can we access ISCF funding? And we say, that's easy. Find a company with some plans and join in. Don't find a company who might be interested and push them through the door first. We've become very good at spotting consortia which form in the waiting room outside the interviews. It just doesn't work. We need evidence of people who are prepared to work together. And of course, a lot of people are applying who are veterans of having worked together in previous programs. So we could be funding 4 feasibility studies. This industry investment matched funding is absolutely key. We have made a business case of finding 205 million of company money to match the 150 of public money. That is not in pledges up front. We felt that was a bit of a smokestack industry approach. We've undertaken through our benefits analysis at the end of this program to say that our specific investments have unlocked 205 million. I think that's a small figure, to be quite honest, over the next 6 years term of the program. But we are not let off the hook. So we've actually said we're not going to just do a sector deal and get the big players in the room to promise to spend that money. We've given ourselves a lot more work. We are going to strategically spend it in a way to make those investments happen. So this is a much more hands-on interventionalist approach than you might find with a normal sector deal. And the technology projects, working together with industry on some larger investments is part of that. We've yet to see how those pan out. That is unproven. So of our 4 strands, that's for one, a slightly more complex relationship with individual companies. It may be through competition again, is the one we haven't done before. But the IA has run through a pilot, and Bruce will come on to those details. And it's the intention is 12 million to be used to fund SME projects, and to do that we need to find partners. And so this is really 2 steps, both steps equally important. In the future we will be investing in projects and companies, but we're not going to do that without your help. And so the whole point of today is that the first stage of this is running this competition to actually find our investment partners. And the more we've looked at this, Chris, I think 6 weeks ago was 6 million, wasn't it? So we ran our first consultations with the community, and Chris and I came away from the very first one in London and said all the questions are about the investment accelerator, from both industry and from small companies and from academics looking to do spin-outs. It's quite obvious that there's more appetite here than we'd seen before. And so it all hangs together in a plan, which is far too complex to read, but of course we have to show that we do plan things, we don't just wing it. But if you look down at the bottom there, we really are in unlike the others, just taking one bite at this, because once we've picked our VC partners, of course the individual decisions are kind of not one step removed from us, but will probably be through investment appraisal boards as opposed to the core work of our team. And that's how that 153 breaks down. So dominated still by CR&D, which is what we know and love and keeps us legal, but a significant proportion on some new vehicles. And that's, I think, very, very healthy sign that we've looked at what we learned on the pioneer stage, and we're doing more than just collaborative R&D projects. And the investment accelerator is probably the most strategic of the lot in there. So we're very keen to get the right expertise to help us get the benefits out of that 12 million investment from the public purse. And that's it.
Thank you, Roger.
Bruce, do you want to?
Yeah, sure. Of course, that 12 shown in 1920 is slightly artificial, because that's us giving it over to you, and then you deploying it over 3 years. So but it certainly comes out of our books at the start.
That's right.
So traditionally, how do I move this forward? It's just the
Page down.
Yep, brilliant. So traditionally we've done this the other way around. We've talked about the investment accelerator first, and then we've gone on to talk about the sector. But we spoke about that internally and just felt it was so important to try and get the overall context of what we're doing anyway behind the scenes, why we're creating an environment or helping to facilitate an environment whereby it's really helping those quantum companies and the whole supply chain develop. So the investor partnership context, I just wanted to talk about that. I mean, Roger's already talked about the industrial. Actually, let's get the whole thing on the screen. I hate these sort of built-up images. Roger's already talked about the industrial strategy, the aim to get 2.4% R&D funding in the long term. That aligned with the patient capital review, and some work done by Bohurst led us to believe some time back actually that there's huge merit in trying to really use our capabilities to bring investors and grants in at the same time. And that really led to the development of the investor partnerships team as such, where we're really trying to bring both pieces in at the same time. That bit in the middle is really quite important. We'll read those. That, you know, a business that wins grants and equity has both factors for success. It's got a product and a market generally. A team that has the skill to find, apply for, and then win two very different types of competitions, competitive investments, our grant, but also reaching out to investors and convincing investors that actually they've got the right stuff to really move the business forward. They've got the right team in place. They've got the right ambition, because, you know, we're really good at judging whether companies have got good technologies, but, you know, whether they've got the ambition to be a really high-scale company is something else. So a team that actually is successful at both of those pieces, I think, tends to be in a good place. And finally, the Innovate UK projects most likely to succeed draw together a talented academic, top research infrastructure, and a business leader to solve a problem. So that's, if you like, the other end of the telescope. You know, traditionally Innovate UK have put grants in place in what look like great key technologies, but sometimes they can just be companies that are really good at writing grants, and they're not ambitious. They're not the sort of companies that are going to scale and grow the UK economy in the long term and increase our productivity. So that's another reason that we really like this investor accelerator model. So what's the concept? Well, I think I like to describe it as first of all, what do Innovate UK do? Well, we're really good at accessing UK-wide companies. We've got a name out there. People know that we're a front door for innovative funding, so they come to us a lot of the time. We're good at validating quality projects. Again, we've got this independent assessment model. 5 independent assessors will look at an application and try and judge whether they think it really stacks up. I mean, you'll see later when Melissa takes you through the questions, it's, you know, they're not dissimilar, the sort of questions that companies need to answer to talk about their innovative projects as they move forward. We've got finance in place. The government fund us to fund the companies, and actually, not to be forgotten about, we actually are right in the hub of impacting and having an impact on UK policy. You know, that's what Roger does day in, day out. It's part of what he talked about before. So we're part of that overall value stream as we move forward. What investors bring to the party, and this is just a small list, is, you know, they're really good. You're really good at validating quality companies. You know, as we say, looking at the whites of the eyes, determining that they're a company that has got a lead entrepreneur that can really take the business forward. Obviously, you're bringing your own finance in, and we've already talked about how we can leverage up and bringing investors in. You're a pipeline to future funding, because get the right investors in place, and they've got the natural linkages to the next funders, whether they're UK funders or sometimes whether it's bringing in global funders. You've got a massive influence on the company. You know, as you move forward, you are only going to be interested in those companies that want to succeed, and we you know, it's a quick fail or a quick win, actually. If they're not going to work, you know, you will cull them pretty quickly. That's fine. and you have access to markets. And that really is the core concept. We've got the two things that can happen in parallel. So by bringing those two pieces in parallel, it maximizes the impact and it reduces the risk through our aligned processes. And the result is that ultimately we have a much stronger portfolio that has those key attributes: strong commercially exploitable asset, good team with aptitude for growth even, but it could be an attitude for growth, and a structure to support scalability. So the model, like I say, really, there's a key set of principles that underpin this, but we've got two models. So the first set of principles are that Innovate UK are good at assessing. We have a quality line. We go through our independent assessment to make sure that companies score above a quality line. So we have to be happy that companies are genuinely innovative and they have products, they have projects and future products that are going to be satisfying needs and all the normal sort of things that Innovate likes to look for in the projects that we back. But in the meanwhile, investors are going to be doing investors' due diligence on the companies. So either you make a decision that's either investable or it's not investable. And actually you're also making a third decision in your mind that it's investable if they get that grant from us. And what those two metrics do is they bring together our bundle of principles. So both sides have to win. Both sides, we have to score above our quality line, and investors have to decide it's investable for us to put our grant in and for you to invest based on our model. Now there is a second option, and the second option is that you decide to invest anyway. You like something so much, you just think, actually, it doesn't need the grant. I just like this company so much, I'll invest. That's fine. That's fine by us. That is actually a result. But there isn't the other bit which says, we scored above the line, you don't invest, then it won't happen. We won't put a grant in that situation. So the two models are, the first one, and we've got at least one investor in the room here who has taken part in that first model, which is the Innovate-led model. So in an Innovate-led model, we could have run a quantum as an Innovate-led model if we'd wanted, in which case we'd have got a panel of investors who all said, actually, we really quite like this concept. We'll look at these companies that come through that apply for a grant and also say we'd like an investor on board. We'll look at that model. We'll put in a proposal for that. In that sort of case, they would have scored above the line from a single competition that we ran, and then we'd have sent those. We'd have let the investors do their due diligence on those and decide whether they wanted to invest or not. It's different from our Innovate-led, which is what we're running today. Today we're running the Innovate-led. Now, what we really, really like about the Innovate-led process, as opposed to the investor-led as opposed to the Innovate-led, is that we're giving an allocation to you. We're giving a grant allocation to you. And we're saying, actually, over the next couple of years, we want you to find companies that you really, really like the look of, but actually, you wouldn't invest in those companies unless they got a grant because it's a little bit too risky. What we like about that process as well is that because you're holding an allocation over a couple of years, it can allow you to slightly change your strategy in terms of what you might invest in. You might start saying, well, before now, quantum was just a little bit too left field for us, or looking at those, we want to just let them go on a bit further. But actually, because we've got this, because we can make these decisions over a longer term, we're going to look at a few companies that we wouldn't have looked at before. So I think it allows you to do it slightly differently. And the other big factor is the timing. When you run an Innovate-led competition, it's one moment at a time. We would say, right, actually, in February, we're going to run that competition. So the companies come in, they apply, and then you have to look at them over an 8-week period of time and decide, yes, actually, that's for us, we're going to make that decision. So that company had to be ready at that particular point in time. But because we're running this over a couple of years, you could have lined up a couple of companies and you could have said, actually, really think this could be right, but just hold your horses, get to that little stage further, and actually then apply for this project, in 12 months' time, because actually we think you'd be really good for this. So it just gives far more flexibility with this investor-led model. So that's trying to just get to the guts of the two different models that we've got. We've done a lot of this. We've done a lot of this so far, and these are the models. The first one was that Innovate UK-led model. I think, Lee, do you mind me saying that you're involved in this one as one of the investors here with the IP group? And we've now, I think, so we've run the top one, the second one's closed now. Ocean Plastics is running with Sky Ocean Ventures. That's live. That was a bit unusual because it started off with the front door, which was Innovate UK led. That bit's done. We're now moving into the investor-led part of that process. We're running something with UKRI where they've got an allocation which can give grants of anything between, I think it's 100k and 2 million, I think. I'm running the Regional Angel Investment Accelerator, where we've given an allocation to 3 partners who are working with angels to try to encourage angel investing outside of London and the South East. We've got the Clean Growth Innovation Fund, which was with NG New Ventures, and I think that's up to about 1.2 million, I think, total project size. You'll understand the differentiation once Melissa starts explaining it later. The Audience of the Future is Innovate UK led, so that was a competition. That's still running, I believe. And now we've got these 2 latest investment accelerators, both investor led. We've got the Healthy Aging, and we've got this Quantum. And I won't go into any more details about that because that is absolutely being covered in a minute. But hopefully that gets over the principle of what we're trying to do with these investment accelerators, and perhaps the difference between the investor-led and the Innovate UK-led approach. Should we hold questions until the end, or unless there's points of clarification, happy to pick up now if there are any.
Just so I understand fully, so the competition will be open for what, 2 or 3 years?
Can we? The timescales that'll be really covered in. That'll be covered in a lot of detail in a minute. So I'll leave that one. Yeah. Okay.
Thank you, Bruce. Okay, I'm going to talk a bit more about this specific competition. So the competition is open now, so it's on our website. That's the link if you haven't seen it. Now, a lot of our competitions now aren't having, all of our competitions used to have registration closed a week before. Most of our competitions aren't like that now, but this one is. So the registration will close on the 25th. The actual competition will close a week later. So just be aware that there is a week before the deadline. So the deadline we really talk about is the 25th of September. Okay, let's just explain a bit what it's about. So the point of this competition is we'll distribute a share of up to 12 million to companies alongside private equity capital. So what we're doing at the moment is we're procuring the investor partners who will actually help us deliver these programs. This is a phase 1, so what we'll run really from kind of Christmas, April time onwards, would be the second stage where the SMEs who are going to receive the money are identified. So the second phase will be open to SMEs for only. So at the moment, to be clear, we're procuring the investor partners. Our question was about timing. So what will happen is the investor partners, and we have 12 million in mind, so we have in mind between 1 and 3 investors. That's just our kind of ballpark. We're going to ask you specifically how much you think your appetite is and why you think you have that appetite. But we had in mind kind of 1 to 3 companies who will have, once you receive your grant, you'll then have 2 years to identify SMEs, really through a set of closed competitions, which I'll describe a little bit later. A series of closed competitions, and identify companies who will then come to us with projects. Those projects will be assessed by us for quality. Projects which pass our quality line will then be funded on the grounds that you or your investment partners agree to fund the other 50% of the eligible costs of the programme. So if a grant, for example, is if a project is £1 million, over that period we'll put in £500,000, and we expect you to put in the other £500,000 of eligible costs of the project. So what you'll do is you identify those which really should be SMEs, which aren't just companies you're going to fund anyway. These are really companies that are currently outside your funding profile, either for risk or for technology or other things. And what those projects will do is they'll allow the SMEs to do a project with 50% money coming from us, 50% of the money coming from you. So effectively there's a 2-year period from when you receive the money for you to identify projects. Those projects can then last up to 2 years. So in theory, you could fund a company on the first day, in which case you'd spend that money over 2 years. If you fund it on the company on the last day, and then the whole period that could end up to 4 years. But fundamentally, you'll have 2 years to find those companies. Those companies can be funded more than once. Is that not right, Bruce?
We're allowing up to 2 funding from grants.
Yes.
You could theoretically put in 150k. You could put for a project which is 150k at the start, and then near the end of the 2-year period, that company could apply again for another project which might be £1 million. Again, you'd still be funding, you'd still be investing. I just say our terminology is a little bit, doesn't fit with investors all the time when we talk about funding the other half of the project cost. You're making an investment into the business, but the investment has to at least equal the same as the grant, in effect.
Just so I understand, you go back a slide, you made a comment at the end.
Oh, sorry. I just have a question on the last sentence, the investor partner manage any remaining grant deployment. So I don't quite grasp how this works. So, for example, if investor X joined the programme, would they have a £2 million pot, for example, to allocate, or would you have to apply for every project with an SME to access that pot?
No, you get the full pot at the start. So if you're a successful investor and you said, actually, I feel that over the 2 years I can find companies who will, between them, actually look for grants of 3 million, you'd put in for a £3 million pot. And if you're successful, we'd give you that, we would pass over, we'd allocate that 3 million to you, that then gets distributed as grants to the companies that you invest in. And that we still do our QA, we still, for every single project that gets put in, we still do our QA, our quality assurance, to make sure that they score above that minimum threshold.
Right, so we still have to apply for the funds?
The company still applies. The company applies, you don't, Lee. So,
well, I follow that. Sorry, I should have been clearer. So the company, so even though the pot of funding is allocated to the investor, it's not free to access. It still needs to apply to Innovate. The company who wishes to utilise that.
Absolutely, and we still put monitoring officers in place.
I could understand that, but what's the benefit then of the money being allocated to the investor up front if they still have to, if the company still has to apply to access that funding?
It goes back to our fundamental 2 axes.
Okay.
The only way that we, having a responsibility to make sure that this is utilised correctly, we still have to go and use that independent assessment model of the companies to make sure that we are happy it scores above that quality line.
Okay. And what would the quality line score be in this case? I mean, some of the competitions it's 88.
It's pretty well 70%.
Okay.
And actually, that is a huge difference.
Yeah, well,
because if you look at smart applications, I can't absolutely publicly say this, of course, but they are right up there. They're at least halfway closer to the 100%. So actually, it is a
Okay.
because the two are coming together, we can afford to use that 70% criteria.
No, I think that's really useful. That's kind of what I was asking, was sort of, trying to understand how much discretion the investor had. But if it's just a quality process, not just, but it's, I think I follow you, yeah.
I think we find generally, where we find the investors get to understand our projects, if you've got a company that's coming through in hardcore quantum, it's going to be pretty unlikely, if it goes forward for an application, that it's not going to be fairly high on those in that innovative space.
Okay.
I think.
I mean, I think it also means you can be a little bit more liberal in when you put, so you're going to be out there looking for companies really who will be eligible for us to apply. Now, I know when you get into deep due diligence, you have to be kind of pretty confident they're going to be investable from you. You can perhaps go down a notch and actually, because we'll do the looking at the project and we'll look at the technical feasibility. We have expert assessors who you may not have on board as easy access to. We'll have 5 of them looking at the projects. So really, I mean, one of the principles behind this is that we get perhaps some projects coming to us, which we look at quality, and then you look at them in terms of investability. But we'll have done that heavy lifting, and that technical due diligence, which is so hard, particularly in an area which is quite technically challenging, such as quantum. So we'll do a lot of that work kind of for you. So is everyone kind of clear in terms of the kind of timing of it? So the grant allocations will go to the companies, and we imagine this will happen kind of in the new year. Then we'll, with you, run closed competitions for 2 years to identify companies who will receive grant from us. Those projects can last up to another 2 years, and that the eligible costs of those projects you effectively can fund half out of the money that we've given to you, and you need to find at least the other 50% from investment private sector funds. So one of the things that we'll ask you, and we'll ask you how you will invest alongside the grant capital. One important point is we've talked about investment alongside ours, because all of that investment doesn't have to come directly from your investment fund. That's right, isn't it? So that can come from other investments. Yeah, it can come from consortia. So all the investment and the follow-on funds we talk about in a minute doesn't have to directly come from your fund. It can come from companies to which you work. So how is it from a different normal investment activity? So kind of how do you going to change? How will you attract these companies? How will you support them to take innovation? So actually a lot of these companies, particularly startup companies, don't just need money, they need kind of help as well, and they need other kind of supporting activity. How will it help them to take to market? How will you add value? How actually will you generate their social and economic impact? And actually looking at diversity too. So, we do expect you to see both geographic and other areas of diversity amongst the companies. So we've talked a fair bit about the competition we're involved today. I think we're just going to talk a bit about the SME competitions. These are the projects that the SMEs that you co-fund with us, they're expected to do. So we're talking about scope here. So without getting into a huge amount of detail about quantum, there are different definitions of quantum, and so we can talk to you about this in much more detail later. Our working definition of quantum is what we call quantum 2.0, which are really defined as projects around the generation or clear control of quantum states, generally resulting in superposition and entanglement. Just to be clear, single photon generation and detection are also in scope. and so is quantum computing. Now, I think the area where we are getting most discussion is around the area of computing, because actually what does that really mean? And in general, I think we mean companies around the whole area of quantum computing. There are a few companies, for example, trying to develop algorithms which mean you don't need quantum computers and you don't need quantum computing. I don't think we're interested in, they wouldn't be in scope, but companies which develop software, hardware, components, support activity, as well as algorithm development. We talk about simulation, but perhaps not emulation. So this is quite a complicated area. We're prepared to talk to you in more detail about that. But it is one of the areas which obviously there's an awful lot of activity. I mean, I think the best way to look at it is, I think there's a view that everyone's waiting for a big hulking great quantum computer to appear, and then suddenly an ecosystem will develop around it. We take a different view. We take a view that you have to get ahead of the curve. There's actually a lot of companies in this quantum computing sector now who are post-revenue, who are actually selling services. They're getting involved in R&D activities. So it isn't. So the race has already started. We're not waiting for it to start. We have three general challenges. These aren't comprehensive. They're just designed to really make people think about the area more than anything else. So the three areas we talk about around technology challenges are connectivity. These are principally ways of securing the storage and particularly the transfer of data. Those of you might have heard of quantum key distribution is one of, but not the only technology in this kind of area of extremely highly secure transmission of data. Situation awareness, which I think is a code for a whole series of sensing technologies. Sensors, for example, which would operate in autonomous vehicles. They would detect gravity and electromagnetic signals. A whole range of sensor technologies which are actually fundamental to a lot of the other technologies which we're talking about being transformative to our society and our economy. And finally, computing. So we're looking at transformative computers for solving currently intractable problems. And the best example of those at the moment are minimization problems. For example, most of you have heard of traveling salesmen as being a classic problem, which is extremely difficult to do at scale with traditional computers. It's a kind of a problem and an optimization problem which we expect to be much more difficult and tractable with quantum computers. So we won't fund, this is just a helpful list of things we won't fund. We won't simply fund proof of concept stage projects. We're expecting these to be projects which have some commercial attraction already. We won't fund things which aren't carried out by SMEs, so these are SME projects only. This particular vehicle doesn't really suit collaborative R&D projects, although actually the projects we fund may well be involved in separate collaborations. But obviously this isn't a model that works very well for collaboration models. Are carried out by SMEs when they're not attracting at least the same amount of private investment, which is what we've talked about before. They're not projects which aren't planned for business growth, can't produce evidence, it has potential to lead to significant following investment, and actually a large capital infrastructure such as building. The timescale of buildings is something that which doesn't really fit very well for this model. So generally you say that buildings, some capital equipment, which perhaps Melissa will talk about a bit later, but we're not expecting to fund buildings out of this program. So what we're expecting to see is the new deal flow. These actually SMEs could be already part of your existing portfolio. It could be investments that you already have money into. We're expecting SME total project sizes between 250k and 2 million and up to 2 years. Now, when we say up to 2 million, just to be clear, that's the total project size. So if a project size is 2 million, and the grant to which will be allocated that will be 1 million, we're expecting to see in the 2 years of that project at least 1 million to come from private sector investment. And we also expect to fund feasibility industrial research projects as defined by the EU. This is a state aid rule. So we're going to talk about a little bit more detail now. So there are two phases of co-investment we expect to see into these projects. So of the 2 years that the SME project is in flight, we expect you to invest at least 1 time. By the end of this project, which is 2025, we expect you to have engendered an additional 3 times investment into this business. Is engendered a fair word?
I'm not sure how that works there, actually. It's good, I like it.
So we expect you to ensure that by April 2025, the total private investment that's gone into that business should be 4 times.
Across the portfolio?
Across a portfolio, sorry, yeah, averaged across a portfolio should be 4 times. So if you fund, if let's say we have a total of 12 million goes to grants across the entire portfolio by April 2025, we expect those businesses which have received SME grants to have received 4 times that total. Is that a clear way to put it?
It is.
Okay.
Just on the last point, you put subject to acting as the lead.
Sorry?
You put subject to acting as the lead investor that they existed. I mean, often a third party might want to lead in place of that.
Yeah, so in the legal agreement that we're pulling together, the only absolute is that the investor has to act as lead in what we call the grant investment round, so that the round where grants coming in,
Yeah. Okay.
and has to put in at least half of the equivalent of the grant size, okay, which shows that they've got serious skin in the game,
Yeah.
from our perspective. Normally, an investor would have to be satisfying us if they're not committing the capital themselves and want to do all of the investment themselves, that they've got credibility of being able to bring in other investors for the further funding rounds. So they wouldn't necessarily be leading, but they'd be very active with the company in that respect and how they drew in the investors. But the only absolute in the allocation agreement is that they have to lead that grant investment round.
So, I think, just to clarify, so you have to lead the 1 times investment, but the additional, effectively 3 times investment over this 5-year period, that can be syndicated. Is that right, Rod?
Well, it can be syndicated, but so it's investment terminology going on here. So it might be that you could imagine a case. I suspect it won't be the case here, but you could have a really active grant investment round investor who's really good at seed, who pulls in, acts as the lead and pulls in other investments in that particular round, but actually doesn't invest at all in the next round. I doubt that would be the case, but it could theoretically be the case. But of course they would be actively, they would know those Series A investors really well who would trust them as seed investors. They wouldn't necessarily be leading in terms of putting their own money in, but they would certainly be active in terms of finding those investors and have a good track record of doing it, because it'd be very difficult to convince us and our assessors who are looking at these applications from the investors going in that you would be able to leverage that much investment in the future.
Okay, thank you, Bruce. So this is just a very simple schematic that I put together just to kind of show the timeline we just discussed. So we have a competition which we're doing for investors, which is where we are today. Once the investors are appointed, we say we have an open call, but in actual fact what you tend to have is you tend to have a series of deadlines every kind of 3 months or something like that. So you're obviously not doing assessments every week, so you'll probably block those together. So over the period of 2 years, we'll run those SME competitions together with yourselves. Those 2-year projects will start over that period, and the additional investment can be deployed to 3 times investment over the period of the project up until the end of the first quarter of 2025. So does that kind of make sense?
Can I just add again?
Yes.
Our terminology isn't really helpful for investors understanding this. We've got a competitions team here because what Innovate are really good at doing is running competitions. We worked out how we put assessors in, we work out then how we score companies and how we work out which companies get funding. Actually, in this context, whilst we call them competitions, they're really QA. It's an ongoing quality assurance process that we just happen to have to batch because it's the only way we can work through our system.
Yes. So they're assessments rather
They're
than
assessments,
competition.
because actually what you're doing as investors is you're deciding that, I don't know, let's say in one of these batch processes, you've got one or two companies that you really, really like, that you'd like to go and apply. So they apply for us. We internally run it through our competition process, but we decide which ones score above the line, and we come back to you and say, yeah, actually, we're happy that both of those companies have scored above the line. Or we might occasionally say, actually, that first company you thought was okay, actually, our assessors have come back and said they don't believe that they are the right level of research. They think it's experimental development, which comes out of scope for us. So whilst we call it competition process, I think that from your perspective, understanding it, it's not really. It's an ongoing batched quality assurance process, I think is the easiest way to understand it. Or is that more of a mouthful?
I understand, thank you.
Thank you, Bruce. Melissa, do you want to take over?
Thank you, Chris. Okay, so I'm just going to take you through the actual process for applying. So I'm going to focus on your side of things rather than the second stage SME part. So just to recap on the eligibility criteria. So all of this information is available on the competition website already. So in terms of eligibility, so to apply for this, then you need to be an equity provider with an established company holding a full UK registration at Companies House. You need to be able to commit to identifying a portfolio of quantum technology SMEs that you're willing to invest in. You need to demonstrate that you have or can raise on demand enough capital to equal Innovate UK's grant and provide 3 times follow-on funding. And then, you also need to be able to meet all operational requirements to manage the grant allocation. So as mentioned, the grant allocation amount is between 2 and 12 million. And duration, so you need to be able to invest into innovative companies between 2020 and 2024 and commit to follow-on funding at least 3 times the grant amount by March 2025. So there is an allocation agreement that will be available for you to review. It's currently not available. It will be towards the beginning of September. That is what we've published on the competition website. So you can download the template allocation agreement from the Secure FTP site. So once you've registered for the competition, you'll have your login details. And then once you log in, this document will be available for you to review. So it's important that you read this before you apply, as it will contain detailed information on the programme, your obligations as an investor, and Innovate UK's obligations. And if you are successful, then this template will form the basis of our contract with you, and you will need to sign the agreement before the grant can be allocated to you. So just to reiterate the key dates for this competition, so it opened on Monday the 19th. Registration closes a week beforehand, so if you do wish to apply, you need to take this deadline into consideration. So you need to register by midday on the 25th of September to be able to apply. The competition will close at midday on the 2nd of October. And those of you that are successful and invited to interviews, these will take place the week commencing the 28th of October. And applicants will be informed by the 8th of November. So I'm now going to take you through the application process. So as I mentioned, the competition is already online. So if you go to the Innovate UK website, you can search for it. All the information I'm going to take you through today is available online, so I'm not going to read everything to you, so you can refer to it at any point. But in brief, so this is the application process that you'll be working towards. So you need to register for the competition, where you'll be sent your individual login details and the application form that you need to complete. Then you need to review the allocation agreement template, which is also available online. Then complete and submit the documents. So we've got the application form and then some optional plus 1 mandatory appendices, which I'll take you through shortly. Once all of the applications have come in, then they will be assessed. So they will be subject to basic due diligence and then a review by independent assessors. Those of you that are pass our initial assessments will be invited to interview, and you will give a presentation to Innovate UK's Investment Advisory Board. And then we will notify you, and anyone who is invited to interview will receive interview feedback. So in terms of the application form, it's a fixed form. All the areas to response to the questions are fixed, so please don't try and amend the form in any way, because your application will be deemed ineligible. So there is I think, 1 A4 page limit per question, so you should be able to answer all of the questions within that. So initially, before you get to the questions, the first part are the application details, so just give a lead contact, and this will be the person that we will be contacting with throughout the duration of the competition, so please make sure that contact is up to date. Investor partner details, so we're looking for you to describe the type of investor you are and how your business is structured, how capital is raised and the current capital available. We're also looking for you to describe how you fit the eligibility criteria of this competition, and then you need to provide us with an investor description for public use, and if you are successful we'll use this description. So please don't include any sensitive information. So in terms of application questions, there are 11 questions in total. However, questions 1 to 10 are the only ones that are going to be assessed and scored, so you won't receive a scoring for question 11 legal structure. In terms of all the information, so you can find all the specific bullet points that I'm going to talk you through on the How to Apply tab online. So we've got optional appendices for questions 2, 3, 8 and 11. However, we have a mandatory appendix for question 10A and an optional for question 10B. If you don't supply that mandatory appendix, your application will be considered ineligible. So please make sure you double check before you submit. So I'll take you through the competition questions now. So firstly, question 1 relates to investment criteria. So Innovate UK wants to give equal opportunities to companies seeking funding and investment across the whole of the UK. So we're looking for you to explain if you have any constraints in terms of investments. So that could be geographical limitations, geographical technical overlap, any limitations on when and for how long you intend to invest, and any restrictions around the timing and availability of capital. So question 2 relates to capital. So what approach will you be taking to investing capital? And here you'll need to describe and answer the bullet points on the screen. So for example, how much and the sources of capital available for investment, how you will meet the requirement to provide investment at least equal to Innovate UK's grant, your strategy for holding investments linked to this proposal and how this compares to your typical approach, and whether you prefer to invest alone or in syndication with other investors. And then question 2 has the optional appendix, which is limited to 10 A4 pages and needs to be submitted in PDF format. Question 3 relates to investment timings and rounds. So Innovate UK typically issues grants to companies developing highly innovative, disruptive technologies. Through the Investment Accelerator, we are keen to encourage private investment into these companies. So what type of companies do you invest in, and how will you change your approach for this competition? So here we're looking for you to explain how you will adjust your investment strategy, the total number of companies in your portfolio, and how many of these first took investment from you in the range of 250,000 to 2 million. How you will develop the capability to assess and support companies through the programme, and the decision matrix for investments and divestments, including the government's arrangements. So, and again, we've got the optional appendix, which is also limited to 10 A4 pages. Question 4 relates to scope. So the ISCF Quantum Technologies Investment Accelerator will increase funding and investment in businesses that aims to support the commercialisation and industrial exploitation of quantum technologies. So we're looking for you to explain what is the interest in the field of quantum technologies, and why you believe it's an exciting area for investment, how many investments you intend to make, any investments that you currently have that could be classified as quantum technologies, and how you will use this programme to access new opportunities in quantum technologies. Question 5, added value of your investment. So Innovate UK has established the Investor Partnerships Programme because we recognise the value of what an investor can bring to companies beyond the investment capital itself. So what additional value can you provide to companies in this programme? So here you need to describe or explain what expertise you can bring to a company, what relevant sector and technology specific expertise you have, how you will encourage diversity. So for example, in terms of age, gender or ethnicity among the companies seeking investment. Question 5, impact of the Investor Partnership Programme. So Innovate UK has been established to encourage private investment into early stage innovative UK companies. So you need to describe or explain anticipated outputs for the Quantum Technologies Challenge, what would or would not happen if your application to become an investor partner is unsuccessful, and the difference being an investor partner would make to your fund. Question 7, raising awareness and engaging with businesses. So how will you raise awareness of this opportunity and engage with suitable businesses? So you need to, in your application, describe or explain your strategy for raising awareness about the opportunity, how you will engage specifically with businesses, and your strategy for promoting the programme to potential investee companies. Question 8, investor partner team. So who is in the team and what are their roles? So you just need to describe the roles, skills and experience of all members of your team, any roles that you need to recruit for, and how the team will be incentivised to ensure the programme objectives are met. And then we've also got the optional appendix, again capped at 10 A4 pages. Question 9, process management and tracking the portfolio. So how will you manage the operational processes and track the portfolio of grant-funded companies? So we're looking for you to outline your processes for identifying potential applicant companies, managing the allocation of grant awards, syndicating with other investors if applicable, and tracking and reporting on applicants for project grant funding and for equity investment. And then finally, question 10, which relates to financial information and operational costs. So here you need to describe how much allocation you're applying for and what will your cost be to manage the fund. So you need to explain the preferred amount of grant that you're applying for, and we also need you to outline the maximum amount of grant and the minimum amount of grant allocation that you'd be prepared to operate with. Your anticipated costs for managing the grant funding, and how your costs might change depending on the amount of allocation you receive. So within question 10, you should include historic and forecast financial information about your fund, showing that it will have the financial capacity to manage an allocation of funding on behalf of Innovate UK. And then I've got a separate side relating to the appendices for question 10. So as mentioned, 10A is a mandatory appendix, and that is capped at 2 A4 pages. And this needs to show the schedule of fixed charges for the 4-year deployment. You need to agree to these charges as part of Schedule 2 of the allocation agreement. And question 10B, appendix 10B is optional, and that's capped at 10 A4 pages. And lastly, question 11 relates to legal structure. So here you just need to describe the legal structure of your fund or entity proposed to hold and manage the distribution of grant funding and the controls and oversights in place. And then we've also got another optional appendix, this time limited at 5 A4 pages. So this question is not scored, but will be used during our due diligence review. So in terms of submitting your application, you will need to log in using the information that you've been provided once you've registered. So as you can see on the screen here, there is currently an agreement summary document, and this will be where you'll find the allocation template, week beginnings next week, 1st of September, in the public area. And then when you upload your documentation, make sure that it's all correctly labelled. Each appendix needs to include your application number. Appendices need to be submitted as PDFs. And make sure your application form is submitted as a Word document. Please don't edit it. Please just make sure that you include only text. Don't put any graphics within your responses, as that will deem your application ineligible. So to upload your documents, simply log in and upload. The system itself doesn't give you any confirmation once you've uploaded your documents. So if you're ever unsure, just log out and log back in, or if you experience any technical difficulties, feel free to contact our customer support help desk and they can assist you. And I'm now going to hand over to Bruce, who's going to take you through the assessment process.
Thank you, Melissa. So I just wanted to also pick up a couple of points there. The first thing is around what we call the allocation agreement, the investor agreement. Apologies, it's not ready for you now to download. As you saw, we've run a number of these accelerators now, and obviously each of those has picked up points of clarification, things like that, and we've basically merged those and picked up all the issues and things that had come from those discussions with previous agreements, and it had become such a mass that actually it needed a major revision, which is what we've been going through, and we're just now tidying up the final legals on that. So as Melissa said, we'll actually get that up in a much improved format and version early in September. I appreciate the devil's in the detail, but you will get sight of that as soon as it's ready, I promise you. Well, obviously you have to get sight of that. The other point I just wanted to pick up, and I don't think it's something that we've emphasised enough actually, is we do ask you in question 7 to point out how you'll raise awareness to the companies and to the quantum community. But of course, one of the great benefits you get from working with Innovate UK as a partner is we will be advertising the investor partners that we're working with. We'll be getting that information out to the quantum community and making them aware of it. We'll be working with the KTN and the KTN leads on that, who also understand that community, who will also be making the quantum companies aware of the partners that we're working with. So we will be using our name, it's one of the things I pointed out before, to also drive businesses towards you. So it will help you. Not that you've got a problem with deal flow, I know, but actually there might be quantum businesses that you're missing at the moment and you'd like to know about. Quantum associated businesses. Okay. So the assessment process. Well, we've got 2 assessment processes really. We've got our standard assessment process that we go through, where we've got a pool now of investment accelerator assessors, and they're people that understand the technology area, but they also really understand what a good VC looks like, what a good investment looks like. And it's those people that will be, in the first instance, assessing each of your applications to see whether we feel that your application is innovative in the way that you're looking at applying and putting your money in place, making sure that, as Melissa said, we're getting additionality out of this. It's not just a way of just leveraging a bit of extra grant on top. So our assessors will be going through the questions that Melissa talked about, but we'll also be in parallel doing a due diligence process. And I'm not going to use the words, like Melissa said, of reading through it. This is all out there, but it will be going through the standard sort of DD things you'd expect our credit team to do. So it's our credit team internally that are going through this. They'll be using a lot of third-party information, but also a lot of the information that came through the appendices that you're providing to make sure that you're going to do what it says on the tin. It's a horrible expression. But it includes all of those sort of things. Again, I'm not going to read it. It's the standard sort of DD stuff you'd expect. The successful companies will be invited to interview. We love doing these in formulaic ways. It's just, we can't stop ourselves doing it like this. So we will have we'll have our investment advisory board. We'll be assessing this, but we'll almost certainly bring in one of those specialist assessors who really understands the VC market as well, and they'll be asking you to do a reverse pitch. So actually, the investors will be pitching to us 10 PowerPoint slides, and then we'll have a 25-minute Q&A. So it gives us a chance to really just tease in, understand your commitment to the process, maybe ask one or two of the questions that we didn't quite understand in your application in terms of how you're going to take this forward. Charges and fees. Okay, this is quite an important piece. So you will get a grant allocation. Let's say it's a 4 million allocation. 3 investors have got 4 million each. It might well not work out that way. Then you will be able to draw fees from that allocation. So your costs, your fee structure will come out of that allocation. So the things that come out of that grant allocation are obviously the grant, the money that goes in grants to the companies as they progress their projects. Your fees out of it that you've given as a fixed schedule. And there's one other thing that I'll have a slide in a minute that goes into a little bit more detail, because we also take out of that our assessment fees and our monitoring officer fees. And they're very predictable. You can, in a minute, I'll show you how you can work that out or give us a broad assessment of it. So it's based on the fact that monitoring officer charges are £5,400 for a 1-year project, or £9,000 for a 2-year project. So we do good monitoring of these projects. And actually, I think most investors who want to work with us would probably see that monitoring as a fairly positive thing. We work hard to get the right monitoring officers in there, so they're not just the tick box types, but they're the sort of people that are checking that the company's doing what it said it would do in terms of taking that project forward. As in all Innovate UK projects, you can satisfy the monitoring officer that it's reached a natural point, that there might be a need to change it from what they originally said, but again, that can be catered for in the normal Innovate UK way. But the monitoring officers should be seen on the whole as a fairly positive influence for the investor. Assessment fees are £600 per investment, so it's a small cost in comparison. Your fee should be broadly based on fixed additional operational costs incurred in operating the scheme. This is straight out of the allocation agreement. In operating the scheme for the provision of the services which are additional to the IP's standard business activities. Look, at the end of the day, you will put in a projection forecast of what your fees will be through that period of time. What we really care about is the cap. It has to be absolutely capped to a maximum, the fee schedule. Fees can be charged right up to the deployment date. So going back to what Chris described, we've got 2 dates. We've got the grant commitment date, which is the first 2-year period in which companies can put in applications for grant right up to the end of that 2-year period. But because the projects can be up to 2 years long, our deployment date is 4 years from the start. So you can be drawing fees right down to that deployment date. Now you do have an additional year of committing to us, which is reporting around further funding that goes on, but we're not suggesting you have fees to cover that last year piece, because your fees are coming out of that grant allocation, so it makes sense to stop it at that deployment date from our perspective. So this is just, we'd ask you to model it because we want to know what the overall impact, how much funding is going to be going out to companies. So the thing that really affects this is the top line is just saying, from an assessed viewpoint, look, how good are you at working out whether you think a company is going to be successful in getting scoring above that quality line. Now once you start understanding your companies and you work with us to understand what a good project looks like, what eligible costs are, what falls within scope, you'll be hitting the 60, 70, 75% return on that. And I've modelled this just on 60, I think, here. So this is a company that's got quite a lot of, they've probably got a 6 million allocation. They think they're going to fund something like 10 one-year projects, maybe
5 2-year projects. And all we're doing is saying, look, just tell us what you think roughly will be our costs back to you, because that affects the overall allocation. That's all we're saying here. We're not holding you to that at all. Not at all. You know, I mean, if you ended up having 30 companies assessed and only 5 of them went through, we would probably, hopefully, have caught the fact that you're not being very good at identifying successful Innovate projects, and probably we'd have said and tried to work out why that's not working fairly early on in the running of this. So over time, we'd expect you to get better and better and better, but it's just try to have a stab at it because it tells us what the overall impact on the allocation is going to be. So we will notify you of whether you've been selected and the amount of grant allocation we're prepared to offer. I've just added in here that, you know, after we've been through the final set of interviews, we might flex that, you know, and that's why we've asked you to give us your ideal, a maximum and a minimum, because, you know, we might find that we think one is just totally able to go and take 6 million, 8 million pound allocation, and the 2 others will take 2-3 million each. So we might flex that at that stage. So feedback, as in all Innovate projects, feedback's available from the assessors as to what we thought was good or not. Post-decision negotiations will then be conducted regarding principally to your proposed schedule, key dates and the fee structure. Further due diligence will be carried out ahead of the signature of the legal agreement, and we will confirm the allocation by February 2020, by which time you must sign the legal agreement. So I know it matters. We will get it up there as soon as we can so you can see it. But there's a number of companies, a number of corporates that have signed up to this allocation agreement. So we think that we've got the terms about right, that it's not going to preclude investors coming in. I know the devil's in the detail. Just re-emphasising the timeline, the only point I would say here is the interviews. We've got a whole day on the 29th in London. So I would expect, I don't think there's going to be like 10, 15, 20 VCs applying for this. So I would expect us to be able to conduct those interviews on the 29th. But we have the 30th as well, in case we have got more people successful than we thought. And then after the interviews, the applicants will be informed on the 8th of November. Oh, deployment. Yeah, I've forgotten I was going to say anything about this. So deployment, so confirmation of the allocation by February the 2020. It's open for when you want to start delivery after then. As I said, we've got this batched quality assurance process. So what actually happens behind the scenes is let's say we had 3 investor partners who are each delivering this. Behind the scenes, we run each of those as a separate competition. But what it actually means is we are providing each of the investors with a link. And it's a link which is by invite only that you give out to the company that you want to go forward. So what we're saying here is you would tell us when you think you're ready to get up and running. Behind the scenes, Chris will be checking with competitions to see when is the next time, when is the first time that we can actually run that batch process that we open and close. So the grant allocation must be fully deployed by the end of March 2024, and then we've got this additional time period to get through across the portfolio this 4 times return on grant as investment. And again, I think I was talking to Leah at the start, and I think I do want to make this point. We are not forcing you to make investments. That's not the way it works. You have to invest at least the same as the grant in that grant investment round. But we are not forcing you to follow on. What we're looking for is a good track record from you as investors in spotting really successful high growth businesses who have on the whole been successful, really want to scale, And therefore, to scale, the only way they're going to do that is by getting further investment. So what we want you to be able to do is to demonstrate you've got that capability. You need to look at the investment agreement once we've got it in place as to how the sort of levels of commitment we want to get around that. But we are not forcing you to invest. We can't do that afterwards.
Sorry, that's the question. Can you explain the exact difference between commitment dates and deployment dates?
Yeah, so it's from the way that we term this with the grant allocation. So the commitment is the commitment to give a grant. So over the first 2 years, you're putting, you're handling the grant on our behalf. So let's say, if I think Chris gave the example, you've got a company that's ready right from the start to go and put in a grant application. They put in a grant application and they get a grant agreed then. They get a grant offer letter, the investment goes through, and so they're ready to go. They get the monitoring officer in place and they've got a 2-year project. The commitment date takes you up to the end of the first 2 years from start, because that's the point at which we close and say we can't now make any more grant offers in that period of time. But because they're 2-year projects, theoretically, you've got some questions at the back there, have you? Sorry. Theoretically, because you could still commit a grant right on the very end day of that 2-year period, and it could be up to a 2-year grant.
You're talking about the drawdown of the grant?
It effectively is. It's the drawdown on the grant, yeah, which is quarterly in arrears. It's the standard Innovate grant process. The monitoring officer tells us the company's done what it said it would do. They've demonstrated they've made the relevant payments, and we tell you now you can actually give that. Actually, I've got things that show that in a second. Actually, yeah. So how does it work? How does it work in summary? Well, so you identify a potential company. You probably just check it with us because we've got ongoing conversations. Actually, Chris, does this look like it's in scope to what we're expecting? Does it stand a fair chance of going through the assessors? And he'll come back to you and say, yeah, I think that looks like a good company. So you then get the company to go and actually physically apply for the grant within that next QA batch period that's available. You tell the company when it will be assessed, so the company knows the timeline, you know the timeline, which helps. If the assessment is positive, we tell you that it's been positive. We issue, actually I've got more bits about this, we then, assuming it's gone through our own project finance, we issue a grant offer letter. The company completes its funding round with you, and then it's good to go. Grants drawn alongside committed equity. I've got a better slide. I've got a slide that goes through a little bit more detail here. So I've put this into 1, 2, 3, 4 main stages. The first stage is, if you like, the pre-application process stage. It's based on good practice and designed to ensure quality and strong conversion. So companies / investors identify potential investment grant opportunities where you think it's investable, because you're not going to put them forward unless you think that you want to invest in it. You review the feasibility with us. Investors commit to investment alongside the grant. So you agree that you're going to invest in it, subject to getting the grant. You're satisfied the investment is likely to happen and strong potential grant application, and then you provide that link to the company. Then we go through the application process. The company completes and submits the application to us. We assess it in our usual way, 5 assessors. There's a time period at which we stop the assessment, all the things that Melissa was describing with you guys. And then we go into the confirmation validation process. So we've told you that, subject to us actually going through our own project finance checks, that we will fund it. So we've got project finance checks that go through all sorts of eligible costs, things like that. We also assign a monitoring officer. We issue you the grant offer letter, and then you confirm to us when the
investment is confirmed. Actually, it's heads of terms. It has to reach heads of terms stage before we're prepared to go and get the grant. Because what we then have is we have a 3-month period of time before the first grant actually physically goes out, because it's always quarterly in arrears. So what actually happens is the investment actually absolutely has to have gone in, or at least the matching part of the investment has to have gone in that matches that grant. In practice, you don't work like that. You don't tranche it up to go alongside projects. We know that. But that's the way it's written in the allocation agreement, because it satisfies all possibilities. Company begins the project, then we get the quarterly payments, quarterly investment management fees are drawn down. I think we've actually made those 6 monthly now, so sorry, it's slightly out of date. We batch up our own assessor and monitoring officer fees every 6 months, and we invoice you for that to take out of the allocation. IP reports on progress as agreed in the schedule. So I mean, this is just confirming. So the activities that are covered off by the IP and confirming the investment are, we have to satisfy ourselves. You will basically, through the offer letter that comes back, which they sign off, tell us that it was legal. So there's a number of things that proceeds of crime on there, know your customer, stuff that as VCs you'd be doing anyway. Well, you don't, it's your money going in a lot of the time. But if you're syndicating money, and we'd need to know that it was all okay and above board. And also actually, I think state aid as well, that they're not infringing state aid requirements is also something that we'll be asking the investor to just sign off on as well. And why? You'll be jointly responsible for safeguarding public expenditure, in effect.
The undertaking and difficulty, what is the definition of that under Innovate rules? There's been some debate about this for companies. I mean, none of these are going to make any money, so at least for 5 or 10 years.
So it's a 3-year. First of all, there's the 3-year criteria. So if it's under 3 years, then undertaking and difficulty isn't relevant.
Okay.
For this. If you look at, I'm not going to answer this directly because I'm not an expert on this, but I know that with innovation loans, for instance, quite a lot of the time they would fail the undertaking and difficulty if they're older than 3 years until they get capitalised. So there's a capitalisation. The very fact, so the undertaking and difficulty will apply post-investment.
Okay, that's
So sometimes we might actually, and this has happened with the UKRI to S, sometimes for older companies, we've had to go back to UKRI to S and say, actually, it will fail undertaking difficulty post-investment. You would need to either put in a little bit more to get them over that hurdle or not do it.
Well, the UID test, as I understand it, Bruce, takes place when the grant, at that point where the grant should start. So it's undertaking difficult test is a point in time test.
Yeah, so it's post-investment.
So when the grant offer letter effectively gets sent out, the company should pass that UID test, which it can pass if it's under 3 years old.
No, it is actually subject to investment, Chris. So, so our project team will know that even though the investment hasn't gone in and it's heads of terms, they will work on the basis that it will be subject to the investment going in.
That's right.
So that is one of the small differences that we've got with this joint process than you would if it was just a single grant application, actually. Yeah, we run the competitions, obviously. We assess, project finance assessment ensures monies are appropriated to legitimate valid enterprises. So we do the eligible costs, all those sorts of things. And we need to make sure it's state aid compliant. So actually at one point, because there are other monies coming in that may come from different sources, we do require you to just, well, actually you'd probably ask the company to tell you that they were state aid compliant with this. We need it signed off. It's one of the things we need signed off. So that's it. So any questions?
Yes,
Do we want, and online as well? No?
One sort of observation followed by question. So,
Sorry. Oh, yes, microphone for...
So just an observation to start with. Obviously, it's a very high-risk area for investments with a field that's quite nascent, and we haven't yet worked out what's going to happen over the next 2 years, let alone 5. So from that perspective, trying to sit here as a VC and work out exactly what allocation for our own funds we'll be putting into quantum and how that will be working over the next few years is not easy.
No.
As such, giving investors individual allocations of, say, sort of £6 million, saying we will deploy £6 million of grant alongside our own investments over the next 2 years. So a minimum of £3 million of their own money plus money from other investors is quite a difficult call to make for a VC to say we will do that. What other kind of, I know the allocation agreement is not yet available, but how flexible is it? Is there opportunities to look at it as you're going forward and adjust?
There's not at the moment, but it is interesting because it's one of the points I have put forward is that to be able to build some flexibility in the future of being able to allocate between investors if the drawdown's just not happening. But it's not the situation at the moment. The allocation is the allocation. So we're wanting you to put your best estimate forward as to what you think you'll be able to deploy.
And again, in sort of timescale wise, it's very difficult to predict how quantum technologies are going to develop over the next 2 to 3 years alone. Like, is there likely to be any extension to allow people to fulfill allocations over the longer term if quantum itself becomes a more difficult investment place?
Not at the moment. We just haven't got that flexibility at the moment with the way this is allocated. I think at the moment the only thing I can say is you'll have to look at the allocation agreement. There aren't punitive clauses as they stand at the moment in terms of this, but obviously we don't want dead money sitting out there that's then going to have to be sort of taken back and ultimately probably given back to Treasury. I imagine it'd be a really bad result.
Okay, understood. Thank you.
Sure. I mean, it's fair to say that one of the purposes of Roger giving his perspective is there's already been a significant investment in the UK in quantum of sort of hundreds of millions of pounds. So we aren't kind of starting from scratch here. So we've also done quite a lot of so one of the reasons why we increased our investment in this area from 6 to 12 is we've done quite a lot of internal surveys as well. So kind of we believe there are the companies around there who are both of good quality and also that they have the appetite for taking investment. So there's a lot of investment in the UK around this project. So this isn't the only thing that's going on. So over the next kind of 2 years or so, I think we're pretty confident there's going to be the businesses out there of quality and scale to take this kind of investment. But we'll rely on you to see.
I think it's one of the reasons that we've designed in this really flexible range in terms of the project sizes from 250k up to 2 million. For a couple of reasons, it allows you a much more flexible strategy in the way that you actually deploy. It potentially allows you to have 5 or 6 much smaller goes with really earlier stage businesses, and it does allow you, because we've got this double twist, if you like, where you can actually, so I'm not talking about failed project applications, that's a different thing. A company can apply twice with exactly the same project if it failed the first time. This is where you might have gone in for a really early stage R&D. I mean, we are still talking earlier stage R&D, but actually that company's really developed and it's now got a portfolio. I think it's got new stuff that it wants to do that's even more tricky, and actually you want to put in a £2 million total project size for that one because it's one of your successful portfolio that you want to take forward, and they've got really great R&D in there that they want to develop. There is the possibility of that approach. So we try to build in as much flexibility as we can into the way that we actually physically have to then allocate behind the scenes.
Just a question on scope. I didn't catch the end of the slide. So you talked about quantum computing type companies that make, I guess, qubits and manipulate qubits. Was there anything else beyond the scope? Because that in quantum? Because that's quite narrow, but I didn't see the end of the slide. So.
Sorry. Yeah, there's a whole way. So quantum computing is just one area. There's lots of other areas which are in scope. I mean, sensing companies are probably, sensing and photonics companies are probably the most common. So obviously we have a very big photonics community in the UK.
Yeah.
If they're involving kind of single photon detection and generation, they are definitely in scope. The other big area which has come out is sensing, say particularly sensing for mobility, but other forms of sensing too. So there are a range of different applications and companies in that area too. When we did our kind of survey about 3 or 4 months ago, we kind of expected a lot of these nascent companies coming up to be quantum computing companies. Actually, they weren't. No. There was a much balanced
That was
group.
my point, as I think it's... well, maybe I'll have a read of your scope section, because the scope will depend on how much we would bid for, to see how much... Because we have quantum computing companies, but there's only going to be 10 in the UK probably, but beyond that, yeah, photonics is a huge amount.
Yeah, so I mean, so again, that's one of the things we're happy to talk to you, both one-to-one and kind of if you have a group of you, come and talk to you about that too. I mean, in a way, quantum is such a creative community at the moment. I mean, we have to make our descriptions of scope quite broad. Then we're saying, well, come to us with your description. So and then ask us if this is in scope or not. And in general, I mean, so if you look at if you go one step back to what we're trying to do with ISCF in quantum, I mean, we have a mission statement which is growing the UK's leadership in the industrialisation of quantum technologies in the UK. So the simple fact of the matter is if it's something that does that, then it will somehow probably be in scope. If, however, it's as we do get occasionally get examples of people wanting to say, well, we can do that and do the same thing, but without using quantum. Well, that might well be a great application, but it's not what we want to do. So we're quite, and there are what we sometimes call quantum inspired or quantum 1.5, which is technologies which have arisen around quantum and based on quantum techniques, but don't fundamentally involve quantum phenomenon in what they do. And we're again looking at them very much on a case-for-case basis. Broadly speaking, they are probably not in scope.
Okay, so a broadish scope, but I'll have a look at that on the slides when I get late and everything.
And the one that probably broadens most, as well as computing, is actually is photonics and single photon detection and those areas around LiDAR and sensing and areas like that. I mean, the other, of course, which if it's not very clear, is also the quantum communications, which is really, we've funded 2 projects in that area as well. There's a lot of UK activity in there. It's quite integrated, and it's probably a little bit further stage than some of those companies too. So we have a range of different things. Any more questions? You know where we are. If you don't have our email connections directly, then if you come to the customer services line, we always say use that even if you know us well, because then at least someone has a record of you communicating with us. And if we forget, then it means somebody reminds us.
I think the point, as I was sitting watching as well, you come from a regulated, disciplined business, so it probably doesn't need saying that it can appear rather bureaucratic, but I think we did describe our processes in quite a bit of detail. The most important point is that this first round, which we're talking about, we don't want to spend our money twice. So we will fund this first round, if you like, the costs of running it, because we want to pick this partner. And there's no point in then having a partner if we don't let the partner do what they do best, which Bruce very eloquently showed in this, if you like, the 70% threshold, you're going to quantify it. But we've got to, at the next step, then open up enough space for our partners to do what they do right, and much better than we can. And so to some extent, this is actually simplifying the process for us. But when you all put it in one place, as you do with a competition brief, it can look rather bureaucratic, so I apologise for that. I've got to say, generally, it's a well-oiled machine. And the way we run competitions and the way we see them through to getting some excellent proposals seems to work incredibly well. So bear with us on that if you're new to the process.
So if there's nothing else, we'll close. Yeah, and I'm not sure when lunch is booked, but there is a buffet lunch there as well. Okay, thank you, everybody.